Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Now please look at the YouTube index to see it if you haven't already. In this video, I looked back and found a very relevant technical pattern for the actions seen since mid-December last year. That key piece of evidence, which is regraded here on this daily chart, is the bright red 2009 to 2016 bullish shift pitch hook. And the specific key piece, buried amongst some other colourful ones, is the bright red upper time, currently at 13,463. That slashes across July's actions. This bright red upper time had previously capped prices, despite the one occasion back in December last year. It had capped prices until early May this year. It was a key piece of overhead resistance, but it has now been breached again, seemingly with force, and now possibly broken. I started 7 weeks ago looking for the next pattern, and this came down to these possibilities. The first major and still working pattern is the purple November 25 to March 26 bullish shift pitch hook, with prices in between the overhead purple middle time, which is currently at 14,551, and the purple lower time below, currently at 12,892. The second possibility is just about working as a pattern right now and is one I've been somewhat uncomfortable with, but has shown some interesting influences. Is the possible late December 25 to early May 26 reverse head and shoulder pattern, a pattern that is usually considered bullish, though there is a bearish continuation variety. Please note the bright red pink neckline for this, which is currently at 13,379, is close to the breached bright red upper time. The market is now fully above the bright pink neckline. I had previously considered the following, which I am happy to repeat again today, and I quote, lay out what I consider potentials right now, not targets yet, but potentials for the move higher. So primary potential will be up in the 14,747 area, that's above the high of the market, and the secondary hard to reach potential will be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern, and I think it is the weakest by a country mile of the ideas mentioned. End of quote. This weakness had been justified as prices have, for most of June and July, been either side of both the bright red upper time and the bright pink neckline, though we are now well over both of these. We continue to note these potentials, but I have chosen once again not to mark them as targets on my daily chart, for the simple reason that I think other more recent patterns have taken on the bullish incentive along with their subsequent targets. Plus, I'd like to see the market above the May high at 14,196.5 to verify this recent bullishness. The third and newer pattern can be seen as either a dark blue early May to late June descending triangle, currently at 13,468 to 13,556, or it can be a longer term end of January to late May possible descending triangle, utilizing the same base but with a higher downtrend, and that one's currently at 13,936. I have not highlighted the second upper trend line of this pattern as was originally. I wasn't convinced on this latter pattern idea, but I still mention it because today we have breached the upper downtrend and may start to consider potential topside targets for this larger, if still to me unconvincing pattern. Now the earlier and smaller dark blue descending triangle has been broken on the top side, and this led me 2 weeks ago to detail some potentials for this pattern. Thus the primary potential will be up in the 14,210 area, whilst the secondary hard reach potential will be up in the 14,515 area. The day of the moves higher, I'm formalizing the potentials into targets for this pattern of a primary target X3 at 14,210 and a secondary target X4 at 14,515. Fourth, there is a very recent pattern I spoke about 3 weeks ago. It's a mid-June to mid-July small ascending triangle pattern, small gold uptrend. I said 2 weeks ago, and I quote, "A primary target X1 for such a move higher is up in the 13,828 area. The secondary higher to reach target X2 up in the 13,976 area." What is interesting about these targets is that they are beyond the dark blue downtrend of the previously mentioned descending triangle. End of quote. Well, target X1 at 13,828 was reached 2 weeks ago, and target X2 at 13,976 was fully reached today. All this still leads me to the same point I made weeks ago when I said, and I quote, "All this leads me to suspect that with all these patterns, we are coming to some sort of cusp, maybe in the next month or two. So watch out, as we could have an explosive rendition after the possible cusp." End of quote. This continues to be unsettling. LME 3-month aluminium. The market here edged out, initially above and now in the last 6 weeks below what was originally a bright green April/May 2025 to date bull channel that morphed into an April/May to date very large bright green rising expanding wedge pattern, currently 32.42 to 38.39. However, the edging out has only resulted in breaches, extensive breaches I grant you, but just breaches, not breaks, just under this very large rising expanding wedge pattern, with the market not really letting go of the bright green lower trend line. The drop down in early June through to early July stabilized at the 50% Fibonacci line of the March to September 22 move at 30.76, and from which we have seen a slow rise, almost a bull channel, between below the newly drawn dark blue lower tie, currently at 31.26, of the big April 2015 to July 26 bullish Andrews pitchfork, a pitchfork I hope will show the bullish incentive in this market. Now, I did point out 6 weeks ago that we had a pattern forming around the gold long moving average, currently at 32.13, and I thought it might be a bearish half hesitation stroke bear flag pattern. And then later a possible reverse head and shoulders pattern, or a possible but unlikely bearish cat's ears pattern. Well, we had none of these patterns. Instead, have what looks like a bull channel with the dark blue lower time below as the lower channel line, which I've already mentioned, and a newly drawn mid-July to date bright red trend line, currently at 32.73, making up the upper channel line. I don't think these pattern machinations are done, and I fully expect to see the two bull channel lines being further finessed, possibly into a wedge pattern. Finally, and just in case, I would once again like to expand on the purple middle time now above, which is currently at 34.93, with a very large November 2015 to April 20 bullish Andrews pitchfork. This bullish pattern is still in operation, as the upper time is right now still up off the top of my daily chart, and the purple lower time, currently at 26.70, is down towards the lower end of my daily chart. This is a pattern to pay attention to on a longer term basis. LME 3-month lead. The market's recent big moves lower has led to 4 patterns forming. The first was a monthly key reversal down for June, with some follow through lower throughout July, but it has been a more stabilizing market than a bearish one. The second pattern was the early May to late June head and shoulders top for bright red neckline, currently at 18.97. 6 weeks ago, I said about this pattern, I quote, "We're in the final stages of completing this pattern, so I cannot give you targets below," assuming, of course, it is a head and shoulders top. But I can give you an idea of the size of the move should it happen in between my commentaries. Hence, for a confirmed break below the bright red neckline, we would have a primary move of about minus $50. And that's under the neckline break. And a secondary, harder to achieve move of minus $97 under the neckline break. End of quote. Well, we had a break lower from the neckline 6 weeks ago, and I added 4 weeks ago, and I quote, "Since then we have had a break lower, and hence it gave a primary target at 1881, the target we reached today, and a secondary harder to reach target X1 down at 1834, end of quote. In mid-July, we moved down relatively close to target X1 before backing up again. I am watching to see what will happen next, whether we head back down or break higher, back up over the bright red neckline. Now, I said 3 weeks ago that, and I quote, "The only quirk would be if we form a double bottom over the last 3 weeks or so." End of quote. This is still true, but I also added 2 weeks ago, and I quote, "That's an alternate quirk would be if the market forms a possible cat's ears pattern, which is a bearish pattern akin to a small double top pattern, but after a big fall, such as the one we saw in June. I'll wait and watch to see whichever outcome the market chooses." End of quote. Well, the market still hasn't chosen, and we remain within a wide stabilization band between approximately 1850 up to 1900. Then there is another newer pattern drawn 3 weeks ago of a dark blue January to June bearish Andrews pitchfork, which might show some insight into the bearish angle of attack here. Over late June and early July, prices have bounced up off the declining dark blue middle time, currently at 1818, twice, showing support if a declining support each day. This is one to watch, though I am, of course, happy in a heartbeat to finesse this into a shallower bearish shift pitchfork if the market demands it. This brings me to my final point. It's a point I've been making here since the start of 2025 and will continue to do so going forward. At the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, we really haven't done that much, especially compared to some of the other metals. Indeed, prices are only about $55 or so dollars lower today than they were at the end of 2024. So this is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now, prices where they are, that one should still keep a look at all things going forward in this year and beyond here in this metal in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.